Today, we will explore one of the most lucrative trading strategies utilizing the Fibonacci tool. A crucial aspect of achieving profitability in trading is minimizing your drawdown. This strategy aims to minimize drawdown by finding the exact area of entry and pinpointing prime areas for profit taking. If you've previously worked with Fibonacci, you might find it challenging to determine where to place your swing points as it's a subjective process. Today, we're offering you a comprehensive guide on how to address this issue, using an indicator that handles this automatically for you. And if this is your first time using the Fibonacci tool, you'll want to stick around. First, let's make sure we don't have any other indicators on the chart. Now, click on the Indicators tab and search for Fibonacci Trailing Stop by Lux Algo. Click the star icon to save it, and then add it to your chart. Fibonacci was discovered by Leonardo Fibonacci, and it refers to a sequence where the sum of the last two numbers forms the next number in the sequence. This Fibonacci sequence was later applied to trading and was found to be extremely useful. Now that we have the indicator on our chart, as you can see, it provides key areas marked in red, green, and blue. These are all key levels within the traditional Fibonacci tool. If you look at the past data, you'll also notice that these zones adjust in a trend-like format. This happens because the indicator automatically adapts the swing points as the price trends higher or lower. If we go into the settings, by clicking on this gear icon, we can enable the swing labels. This will allow us to see precisely where the swing points are that the indicator is using to make its calculations. If I use my regular Fibonacci tool and try to draw between these swing points, we can observe how the Fibonacci tool correlates to the indicator. Here, we have the area between the 0.618 and 0.38 zone colored in blue. Next, we have the 0.78 and 0.88 area colored in red, and down here is below the 0.23 level colored in green. The line trailing above the blue zone can be used as a trailing stop after an entry and to also monitor if the internal structure is maintaining the trend. Above the swing option, we can control how the swings are detected by selecting how many candles are used to the left and right to determine a swing point. L20 means that there needs to be 20 candles to the left of the highest candle to make it a swing high or low. Next, we have the trailing stop settings. We can adjust the level of the Fibonacci that is used to determine the trend sentiment alongside the market structure. By default, this is set to -0.38, so the line trails below the -0.38 retracement. However, we can customize it or choose from predefined options such as 0.618, which can offer a more long-term outlook on the market trend. Below that, we have the option for the latest Fibonacci, which provides an overlay of the most recent Fibonacci being formed in real time. The Shadows option, when disabled, will remove the internal Fibonacci sequences being drawn and only provide an area based on the trailing level selected here. For instance, if I have the trailing stop level set to 0.618 and I disable shadows, now you'll see that only the area above or below the 0.618 level is being colored. Let's reset the options back to defaults, and then we can discuss how this indicator is designed to be used. The first and most basic way to use this indicator is to easily identify optimal entry areas. When using the traditional Fibonacci tool in an uptrend, we typically draw from the swing low to swing high and wait for the price to pull back into this region to seek an entry. However, traders often grapple with where to precisely place the swing low and the swing high. With this indicator, it automates this process for you. You can simply wait for the price to pull back into this region to find your entry. Once you have an entry, you can target the high or low of the recent swing while keeping stops above or below the entry candle's high or low. It's also worth noting that the green, red, and blue zones can all be used for retracement, though the blue zone is considered the most optimal. What you'll observe is that if the market happens to reject from the green zone in a downtrend, it typically leads to a stronger impulse move to the downside compared to if it retraced to the blue or red level. This is because when using the Fibonacci, the depth of the retracement will determine how far the market is likely to trend. The blue zone is the most optimal because it can help prevent you from entering at market highs or lows. If you buy at these extremes, you might be purchasing at the high of the market, and a retracement might lead to you being stopped out. Now I will share with you a strategy we've tested with this indicator to let you know exactly when to click buy or sell. This strategy was used to win this trade, and this trade. But before we dive in, if you're enjoying the video, don't forget to like, subscribe, and share so you don't miss out on future content. Also, if you'd like to try the best premium indicator on TradingView by LuxAlgo for 30 days risk-free, you can find the link in the video description. Your support greatly helps the channel. Now, as promised, here is the strategy. Let's begin by adjusting the indicator settings. First, ensure that the swing labels are turned on. Next, let's set the trailing stop line to 0.618. This will serve as our long-term trend detection tool. With this indicator automatically plotting Fibonacci zones for us, we can now concentrate on taking our entries in the appropriate zone, specifically within the blue zone. To pinpoint the exact moment to click buy, we'll need another indicator to serve as our trigger. Head over to the Indicators tab and search for LuxAlgo Signals and Overlays. Add it to your chart. In the settings, switch the signal mode to Contrarian plus exits, disable the Smart Trail, and change the candle coloring to Contrarian. Finally, reduce sensitivity to 7. This indicator plots signals that can be used to confirm the direction of the market. The Contrarian mode is specifically designed for finding reversals, while the Confirmation mode is for trend continuation. We'll use these labels to confirm an entry, or these X markers, which also indicate an exit signal. We want these signals to occur within the blue zone of the Fibonacci trailing stop indicator. This way, the Fibonacci indicator will be used to plot our trend and Fibonacci zones. This line will ensure we are only taking trades in the overall trend direction, and entering at the Fibonacci zones will help prevent us from getting stopped out by buying highs and selling lows. The Signals and Overlays indicator will serve as confluence to trigger our entry in this zone, thereby increasing the probability of success. Let's walk through an example of a buy trade. In this chart, we can observe that the overall trend is bullish, indicated by this line here. So, our strategy is to wait for a retracement back to the blue zone. Once we reach this point, we'll be on the lookout for a contrarian signal or an X to form. At this juncture, we'll set our stop just below the blue zone and target the recent swing high. After entering the position, you can let the trade run to take profit. It's worth noting that this is a set and forget strategy, which means once we've used these indicators to find an entry, we won't be adjusting the entry based on changes in the indicator once it's active. Now, let's consider another example. Here, we can see that the market is in a bearish trend. Our approach remains the same, we wait for the price to retrace back into the blue zone. Next, we keep an eye out for a contrarian or X signal. At this point, we'll set our stop just above the blue zone and target the recent swing low. When you're on the verge of entering a position, always keep in mind that you can use the internal swing structure indicated by these labels to determine if the structure aligns with the long-term trend. While not mandatory for entry, this can further enhance accuracy. If the structure is indeed aligned with the overall trend, you can consider increasing your risk on those trades, and conversely, reducing your risk if it isn't. Another powerful pattern to be mindful of is a shift from a higher high to a lower low, or vice versa. For instance, in this chart, we can observe that the swing label recently marked a higher high, followed by the creation of a lower low. Drawing a zone across from the higher low level, we can utilize that area as confluence for an entry. In this zone, we would have 4 points of confluence, a contrarian or exit signal, the blue zone of the Fibonacci trailing stop, the retest area, and the overall market trend. This creates a prime zone for trade execution. I hope you found value in this video on the Fibonacci trailing stop indicator. Keep in mind, while you can use any signal indicator of your preference to create confluence for entries in the retracement zone, based on our testing, the Signals and Overlays indicator by LuxAlgo has shown promising results. If you'd like to try it risk-free for 30 days, you will find the link in the video description. By using the link, you'll also gain access to price action concepts and the oscillator matrix, allowing you to test all 3 indicators and see if they're the right fit for you. Don't forget to like and subscribe, and we look forward to seeing you in the next one.